Investors on edge today as a strong ADP report suggesting more rate hikes could be on the table. We're back with Frances Newton Stacy from Optimal Capital. Go through some of the stocks that she believes are the best bets right now. Stacy, let's start off with gold. We're not too far from those record highs where we were just about a month ago. Why do you think it's still a very good hedge at this point?
Okay, it's selling off for sure because we've had this rise in tech. But I do think that as the credit risks increase, as we go further with rate hikes and we get further away from our first rate hike and the lagging effects of the rate hikes come in, I still think that, that affects real rates, and real rates affects the price of gold. You start to have a correlation between the dollar and a positive correlation between the dollar and gold. And I do think, again, there is credit risk in the market, so I would be buying the dip in gold because the other things that have taken off this year are, don't want to chase those trades.
Yeah, and we have seen, gold often move as a safe haven trade as well. Let's talk about the other one that you're looking at right now, the iShares MSCI Japan ETF. Japan, a story that has been well covered here in terms of why we have seen so many foreign investors pile into the market, specifically around corporate governance reform. What do you see that's attractive there? Is it about valuations? Is it about opportunities in relation to what else is out there right now?
Yeah, they're just at a different place in the business cycle. So when you look at the global tightening and you look at the weakness in Europe and you look at the weakness in China and you look at the, we're still resilient, but, some potentially upcoming weakness in the U.S., Japan just looks more attractive from the monetary policy standpoint and, their rate of inflation. They don't have that issue that the Fed has, which is, trying to get inflation off of the 5 handle for, the yearly numbers. So that's the difference, basically.
Frances, when you take into account so many traders have been piling into this trade, I think a lot of people are asking just what exactly is going to be that catalyst. I know you mentioned the moves there from the central bank, but outside of that, what's going to keep that momentum moving in the right direction in that market?
Well, it's just the macro policy. So, what's interesting is that we just have to wait and see. But the thing about it is when growth and inflation are declining, or when you have stagflation where inflation's going up and growth is declining, it tends to be the global macro, the top down, that kind of dominates the system. And, when you have growth and inflation going up or just growth going up and inflation going down, it tends to be the bottom up stock picking. And so we're in this environment where the global macro and the rates and the central banks are still, I think, driving the bus. And so then that's the difference. And, that would be what I would watch.
I mean, with that said, isn't it also a very different market in that inflation hasn't gone up to the levels that we have seen in places like the U.S. or Europe, largely because of the demographic shifts too? And how much of that do you have to consider when you think about, whether this is a short-term play or a long-term play?
Well, for me, I'm just, China looked great because China earlier was easing, and they were the, sort of outlier in the fact that they were easing. And then, of course, the Chinese picture changed pretty dramatically. So I think in this environment globally, I think for me, I want to be more tactical and not say, well, definitely there's a demographic change and that does support a longer term outlook. But I'm just watching those central banks. I'm just watching the monetary and fiscal policy and the liquidity levels. Because I think that's what's really in play. And I think that, Japan becomes an alternative to the rest of the world that's tightening. And that, that's creating demand in Japan that, is coming from existential and external factors. So I don't know how sustainable that will be.
Frances, let's talk about some of the picks that you don't like, some of the names that you're saying to avoid. Technology, obviously a massive winner in the first half of the year. Guess we're approaching some overbought levels?
Again, just being tactical. Yes, this stuff is, it's risen so far so fast. So when we look at technical analysis and we talk about reversion to the mean, some of the angles and the trajectories that tech has gone up on, Tesla has gone up on, it's just not sustainable. You're going to have a pullback, even if it's in a larger bull market. And while I fully believe in AI and I fully believe in technology and the strength of these balance sheets, I do think that we're going to have some credit problems potentially in the second half of the year. So I would be a little bit more tactical and defensive.
Even with that said, there's been a number of analyst notes that have gone out specifically on Tesla, downgrading the stock, but also reiterating the long-term play, right, in terms of where they stand in EVs particularly. Is that where you stand on that stock? Is it just about the incredible run-up that we have seen and this entry point just not being sustainable?
Yeah, and I'm more of a technical analyst, but yes, I agree with that because I believe in the future of AI. I believe in the future of EVs as I do AI. The thing is that we're hitting some double top and triple top resistance in the tech space, and it's the angle that it's gone up on that I do think that it never hurts to take some money off the table, because what happens is you have these massive moves, and then people tend to hang on and they sort of round trip. And particularly in this environment, volatility has been very muted, but I do expect that the VIX is going to go up into a higher range as things start to occur later in the year, and that's going to, affect tech and affect Tesla. So I think taking a little bit of money off the table here never hurt anyone.
We'll leave it on that note. Francis Newton Stacy, Director of Strategy at Optimal Capital. Good to talk to you today.